Welcome to the deep dive.
Good to be diving in.
Yeah, we've pulled together a stack of recent sources covering the crypto market, kind of looking at everything from the big picture movements you're seeing to specific asset trends.
And some really interesting developments happening within the ecosystem itself.
Exactly. It feels like a mix, doesn't it? You've got these powerful macro forces bumping up against specific crypto news.
Yeah, project updates, platform moves, and we're even going to take a deeper look at how certain assets like XRP are reportedly being eyed by more traditional companies.
Right. So our mission today is really to try and cut through some of the noise in these articles. We want to pull out the key insights, understand the important details, and figure out what's really driving things, according to the info we've got here.
Basically getting the signal from the chatter.
That's the goal. Trying to connect the dots for you, taking these different pieces and seeing how they fit together into the current landscape.
Makes sense.
All right, let's unpack this stack then. Maybe start with the overall market picture, because the sources seem to suggest things are a bit, cautious right now.
That's a good way to put it. Yeah, looking at the current snapshot, the mood definitely feels subdued.
Subdued, okay.
Yeah, the global crypto market cap is down a bit recently. One source mentioned a 2.8% decline. So the total cap is sitting around $3.42 trillion.
And trading volume, is that high or low?
Relatively low, actually. Around $92.6 billion daily is what was noted. So not exactly frantic activity.
Okay, so not a huge crash or anything, but definitely a pullback, a pause maybe.
Yeah, a pause sounds right. And you see that reflected in how the major coins are doing.
Like Bitcoin, Ethereum.
Exactly. Most of the big names are following suit. Bitcoin is down slightly, maybe 1%, trading just over $104,000. Ethereum's also in the red, down about 1.3%.
Any major movers?
Well, Dogecoin's seeing a bigger dip, down 3.4%. But then you have Tron kind of unchanged, and Toncoin actually up a little bit. But honestly, the overwhelming picture, if you look across the top 100 coins, it's a sea of red.
A sea of red, okay. And this general caution, it feels like it's not just about specific crypto news, right? It points to something, maybe something bigger influencing things.
Absolutely. That's where the sources really connect it back to the macroeconomic factors. The traditional financial world bleeding into crypto.
Like interest rates and jobs data.
Precisely. One article really zeroed in on how analysts are linking Bitcoin's immediate future, its near-term outlook, to upcoming macro data from the U.S., specifically the jobs report.
And how that might affect what the Fed does with interest rates.
Exactly. It's all about expectations for Fed rate cuts.
And this is where analysts don't quite agree, is it? Depending on how that data looks.
Yeah, there are definitely conflicting views. Analysts from Bitfinex, for example, laid out two potential paths.
Okay, what are they?
Well, scenario one. If the U.S. jobs report comes in weak, slower job growth than people expect, then the bulls might target a Bitcoin rally towards $125,000 in June.
Because weak data means the Fed might cut rates sooner.
That's the logic, yeah. Weaker labor data could signal the economy's cooling off, giving the Fed more room, maybe more reason, to cut rates. And lower rates generally make riskier assets like crypto look more attractive compared to, say, bonds.
Right. Cheaper money looking for a home.
Mm-hmm.
Okay, so what's the other side of that coin? The downside scenario.
The flip side is if that jobs data comes in stronger than expected, that would suggest the economy's still running pretty hot, potentially pushing back those rate cuts.
Delaying the cheap money, basically.
Right. And in that case, the same analysts warned Bitcoin could actually fall back towards $95,000.
Wow, so quite a range depending on one data point.
It really shows you how sensitive the market is right now to these big economic signals. Any little hint about the Fed's next move seems to send ripples through crypto.
And it's not just the jobs report causing this caution, is it? I think one source mentioned other signals analysts are watching. More bearish signs.
That's right. Valentin Fournier, a research analyst, pointed out a few things. He mentioned sort of fading momentum in the market, even though some macro stuff like inflation might be easing.
Fading momentum, okay.
Yeah, and he also flagged a spike in IPO activity in the wider market. Some analysts see that as insiders trying to cash out while valuations are high, maybe a bearish signal for risk appetite overall.
Interesting connection.
Add that to shrinking inflows into crypto ETFs and the declining prices we already talked about. Well, he paints this picture of a tired market running out of fuel.
Tired market is a vivid phrase. It's just, that maybe the easy gains are over for now? A general sense of risk off?
I think that's the implication, yeah. It suggests that even if you believe in the long-term crypto story, the current market psychology might just be leaning towards caution until there's more clarity, either from the macro picture or some big internal catalyst.
Makes sense. Now, slightly different angle, but still, in the U.S. regulatory world, there was a mention about the Federal Reserve.
Oh, right. The confirmation of Michelle Bowman as the Fed's vice chair for supervision.
And that was seen as positive by some in the crypto space.
Apparently so. Senator Cynthia Lummis and the Crypto Council for Innovation were quoted viewing it positively. Lummis called it a good step for digital assets, kind of suggesting it might signal a move towards regulation based more on evidence rather than just politics.
So even with market jitters tied to economics, there are still these background moves on the regulatory front that some people see as potentially constructive for the long term.
That seems to be the takeaway from those mentions, yeah. It just shows the regulatory landscape is still very much being built, and these appointments get watched really closely for any clues about where policy might be heading.
Okay, so let's pause here for a second. Why does all this market snapshot and macro stuff matter to you, the listener?
Well, it gives you the essential backdrop, doesn't it, to understand the current mood you might be feeling or seeing in the market.
Right. It highlights the specific economic levers, like interest rates and jobs data, and the regulatory shifts that analysts think are really pulling the strings right now.
Exactly. Understanding that helps you look past just the daily price wiggles and see why the market might be acting this way, why analysts are making certain predictions, and what big events everyone's got their eyes on.
Knowing these drivers helps you make sense of the volatility.
Definitely. It's crucial for seeing the bigger forces at play.
Okay, let's shift gears then, from the big picture market feel to what's actually being built and launched within the crypto world. Because even with that market caution, development hasn't stopped, has it?
Not at all. And what's really interesting is seeing how platforms are finding new ways for you to use different crypto assets. Like Coinbase, the big exchange, they've just launched wrapped versions of XRP and Dogecoin.
Wrapped XRP and Dogecoin on their, what is it, Base network?
That's right, CBXRP and CBDOGE on Base, which is their Layer 2 network built on Ethereum.
Okay, hang on. Wrapped tokens, Layer 2. Can you break that down quickly? What does that mean practically?
Sure. Think of a wrapped token, well, it's like a voucher or a claim check. Coinbase holds the original XRP or DOGE safe and sound, right?
Okay.
And then they issue an equivalent token, backed one-to-one, that lives on a different blockchain, in this case, Base.
And Base is the Layer 2.
Yeah, Base is an Ethereum Layer 2. Imagine Ethereum is like the main highway. Sometimes it gets jammed and tolls are high. A Layer 2, like Base, is like an express lane built on top. It's generally faster and cheaper for transactions.
Got it. So they're taking XRP and Doge, which normally live on their own blockchains, and creating these versions that can run on this faster, cheaper Ethereum lane.
Exactly.
What's the point? Why do that?
The main goal is expanding utility. By having these wrapped versions on Base, you can now use your XRP or DOGE in all the decentralized finance or DeFi apps that are being built on Base, which is part of the Ethereum ecosystem.
So it lets them play in the Ethereum sandbox, basically.
Pretty much. It allows for cross-chain use, letting these assets interact in ways they couldn't before. A Base spokesperson basically said it's about making it easier for people to get involved in the on-chain economy.
And how's the uptake been? Did people jump on it?
Seems like it. The source said users minted over 2.3 million CBXRP and something like 10.4 million CBDOGE just in the first day.
Wow.
And Coinbase already has a wrapped Bitcoin, CBBTC. That's huge. Billions in market cap. They're planning to add more wrapped assets too, so it's clearly a strategy for them bridging assets and users across different networks.
That makes sense. Connecting the islands, so to speak.
Yeah.
What about other kinds of progress? Like on the decentralization front, crypto is supposed to be decentralized, right?
Absolutely. And there was a significant move highlighted there too, Botanix, which is building a Bitcoin-based blockchain. They've shifted their network setup to what they're calling a decentralized federation.
Decentralized federation. What does that actually mean? How is it more decentralized?
Yeah. It means they brought on 16 independent node operators. These are different companies or groups running the software that keeps the network secure and processes transactions.
Okay, so not just Botanix running things themselves.
Exactly. And crucially, these operators are independent entities. The source mentioned names like Galaxy, Fireblocks, Alchemy, Antpool, well-known players in the space.
So the idea is no single group has control.
That's the claim. Botanix says this structure makes the network resistant to, unilateral influence or censorship. Because making decisions or executing things requires coordination across these independent, geographically spread operators. Not even Botanix itself can just dictate things.
That sounds like a genuine step towards decentralization, moving away from a single point of control.
It does. They're positioning it as the first Bitcoin-based blockchain that's decentralized right from the start in this particular way, with the original developers, Botanix Labs, stepping back from operational control.
Ambitious. Do they plan to add more operators?
Yeah, they mentioned plans to grow it to hundreds of nodes eventually, aiming for a system where pretty much anyone could participate.
Okay, interesting. So we've got platform utility expanding with wrapped tokens and core decentralization efforts moving forward. Any other little bits of news from the ecosystem?
Yeah, just a couple more quick examples showing the variety of activity. There was a partnership between BYDFi, an exchange, and Ledger, the hardware wallet company.
For secure storage.
Right. They're doing a limited edition NanoX hardware wallet specifically targeting crypto influencers and content creators, kind of a customized, mobile-friendly, secure wallet.
Makes sense. What about investment in infrastructure?
HashPower, they're focused on decentralized mining and AI infrastructure. They just secured a $4 million investment round.
For what purpose?
They plan to use it to expand their decentralized mining operations globally and also build out infrastructure linking real-world assets and AI stuff with on-chain access, so bridging physical and digital.
Okay. And then there was that story about the solo miner, just as a reminder of the randomness sometime.
Oh, yeah, the solo Bitcoin miner who beat absolutely insane odds to solve a block all by themselves.
And got the whole reward.
Yep, the full block reward, worth over $330,000 at the time. Apparently, they'd rented a bunch of extra mining power for a short burst to try and increase their chances, but still.
It's a wild story. A real lottery win in the mining world.
Huh, yeah. Okay, so why do these different snippets matter for you listening?
Well, they show that even when the overall market's feeling a bit hesitant because of those macro factors we talked about, the people building crypto, they're not just sitting on their hands.
Right. You're seeing progress on lots of different fronts.
Exactly. Making assets more useful across chains, like with Coinbase, strengthening the core decentralization, like Botanix, partnerships for security, investment pouring into new infrastructure like HashPower.
And even the occasional wild success story, like the solo miner. Right. It just underscores that the crypto ecosystem is constantly evolving. There's a lot happening driven by technology, by utility efforts, by partnerships. It's way more than just the daily price charts.
It highlights that persistent focus on building things, regardless of market swings.
Precisely. Technology, utility, resilience, those themes keep running underneath.
All right, let's switch gears again and do that deep dive we mentioned into this specific trend that one source really highlighted. The idea that more companies are reportedly starting to build strategic reserves, not just in Bitcoin, but specifically in XRP.
Yeah, this is a fascinating one because, corporate treasuries holding Bitcoin isn't that shocking anymore. Companies often frame it as a digital store of value, maybe an inflation hedge.
Right, like MicroStrategy.
Exactly. But these sources suggest a growing list of companies are looking at altcoins, and specifically XRP, maybe for different strategic reasons.
Okay, so who are we talking about? What kind of examples did the source give?
Well, it listed quite a few. Weebus International, a Chinese company, reportedly filed documents with the SEC outlining a plan for a $300 million strategic reserve with a focus on XRP.
$300 million, wow.
Yeah. And VOPower International announced a plan for $121 million in XRP reserves. Well, Logistics is said to have already put $50 million into XRP.
And there were others mentioned too.
Yep. Names like Alt Capital Group, BC Bud Corporation, Worksport, Remix Point, all apparently making similar moves or holding XRP. These aren't tiny amounts, and it points towards maybe growing corporate interest globally.
Okay, that's a pretty significant list and some big numbers.
Yeah.
So let's dig into the why. According to the source, why would a business choose XRP for a strategic reserve? Especially given, its volatility.
Well, the arguments presented try to go beyond just hoping the price goes up, though obviously that's probably part of the calculation for some. One perspective cited from Austin King at OmnifDN was that companies might see it as a way to latch onto these rapidly growing crypto networks to share in their growth. So less about just holding, more about integrating somehow.
Okay, benefiting from the network effect. But isn't there also a big argument tied to what XRP was originally designed for? payments.
Yes, that's definitely a key argument pushed in the source. XRP's technology gets highlighted for being fast and cheap for transactions.
Especially cross-border ones.
Exactly. The idea is it could be ideal for cross-border payments, helping companies improve their financial efficiency and maybe transparency in global operations. The source even used Weebus's ride-hailing platform as an example where that kind of efficient global payment system could potentially be useful.
So the suggestion is they might not just be holding XRP as an asset, but actually thinking about using it in their business.
That's the argument presented, yeah. An analyst named Pumpius offered a view of XRP not just as crypto, but as potential settlement architecture.
Settlement architecture, meaning?
Meaning he thinks companies like Weebus are betting on XRP's utility, its usefulness in a payment and settlement system, not only on its price going up.
And this utility idea, it connects to other things Ripple is doing, like their stablecoin, right?
It does. The source brings up RLUSD, Ripple's stablecoin. It's also designed for fast, low-cost cross-border stuff and is seen as working alongside XRP.
How does it connect to XRP's value, according to proponents?
Well, the crucial point they make is that every single transaction using RLUSD on the XRP Ledger, the XRPL network, requires a tiny bit of XRP to pay the transaction fee.
Okay, like gas fees on Ethereum.
Kind of, yeah. And that XRP fee gets burned, basically destroyed or removed from circulation. So proponents argue that as RLUSD usage grows, this constant burning of XRP could, over the long run, reduce the total supply and potentially push up XRP's value.
Interesting mechanism. The source mentioned RUSD's market cap.
Yeah, and noted it was around $369 million as of June 2025, and also mentioned the potential impact if a piece of legislation called the Genius Act passes.
Okay, so putting this all together, this trend of companies buying XRP, is it purely driven by this potential utility story? Is that the whole picture?
That's the critical question, isn't it? And the source does a good job of presenting the other side, the significant risks and counterarguments.
Like the volatility we mentioned earlier.
Absolutely. That's front and center. Despite any utility arguments, XRP is fundamentally a very volatile asset. We've all seen it.
For sure. Big swings.
The source explicitly points out its price dropped over 80% in previous major crashes, like 2018 and 2021. Now, if you're a company holding this as a strategic reserve, well, that kind of volatility is a massive concern. Reserves are usually meant to be stable, or at least somewhat predictable.
Right, not potentially losing 80% of their value.
Exactly. It makes the term strategic reserve sound a beaster for XRP.
And what about the network itself? Does the current state of the XRP ledger actually back up these grand claims of global utility today?
That's another really important counterpoint raised. The source voices concerns that maybe the hype, the expectations from investors, or even these companies might be getting ahead of the actual real-world data from the XRPL network right now.
What kind of data?
Well, it highlights a few metrics that seem maybe a bit low if widespread adoption was already happening, like the total value locked, or TVL, on XRPL. It's under $60 million.
And TVL measures.
It represents the value of crypto assets locked up in applications running on the network. So a low TVL often suggests limited use in things like complex DeFi or other business applications actually running on the chain.
So not much activity in terms of apps locking up value.
Right. The source also mentioned a sharp drop in on-chain activity recently and a relatively low number of validator nodes compared to some other major networks.
But what does that data suggest overall about readiness for global scale?
Based on those specific numbers presented in the source, it kind of suggests the network might not yet have the, let's say, the depth or breadth of activity you'd expect if major global companies were already using it for payments or settlement on a massive scale right now.
So a potential mismatch between the narrative and the current on-chain reality.
That seems to be the implication from the data presented, a potential gap there.
And is there any skepticism about why some companies might be doing this? Could there be other motives besides genuine belief in the utility?
Yes, the source does touch on that. It mentions warnings from some experts about this phenomenon they call public crypto vehicles.
Public crypto vehicles, what's that?
The concern is that some companies might be buying up crypto reserves, maybe particularly altcoins, primarily to generate buzz, to get positive headlines, maybe boost their stock price because investors get excited about them holding digital assets.
Using crypto holdings as a PR move, essentially.
Yeah, that's the worry. And the risk highlighted is that these companies might be ignoring or at least downplaying the huge potential downside if those volatile altcoin holdings plummet in value. That could really hurt shareholders down the line.
Okay, so pulling back on this whole corporate XRP section, it sounds like a really nuanced picture is emerging from these sources, not black and white at all.
That's definitely the key takeaway. You've got these compelling arguments, right, about XRP's potential usefulness for international payments for settlement, especially tied into Ripple's other tech like RLUSD.
Right.
But those arguments are sitting right next to some really significant, clearly stated risks. You've got the massive price volatility inherent in XRP, and then you've got this data about the current state of the XRP Ledger's activity, which, according to the source, doesn't seem to fully match the scale of utility being claimed just yet.
So why does drilling down into this XRP story matter for you, the listener?
Well, it gives you specific insight into how some companies might be thinking about crypto beyond just Bitcoin. It shows you the specific arguments being made for assets like XRP, often based on utility claims.
But
Crucially, it also arms you with the other side. The risks, the volatility, and the important data points like TVL and on-chain activity that you need to look at yourself to judge whether those utility claims are actually being met by real-world usage today.
it encourages you to be critical, basically, to look at the why behind these corporate crypto announcements.
Exactly. It's a reminder to evaluate any asset by looking beyond just the grand vision and weighing it against the current market realities and what the actual on-chain data is telling you.
So let's try and wrap this up. What does all this mean when you put it together?
Well, we've seen a crypto market that's clearly sensitive to those big global economic signals like jobs reports and Fed expectations.
Yeah, definitely feeling that macro connection.
But at the same time, innovation is still happening within the ecosystem. You've got platforms like Coinbase trying to expand utility with things like wrap tokens, projects like Botanix pushing hard on core decentralization.
And then this really complex picture emerging around corporate adoption of specific assets like XRP.
Right. A trend that seems driven by talk of potential utility, but it's bumping up against real concerns about volatility and whether the current network activity actually supports those big claims.
It's just a clear illustration of how dynamic this whole space is, isn't it?
Yeah.
It's being shaped constantly by global economics, by tech progress, and by these evolving, sometimes pretty complex corporate strategies.
Absolutely. Multifaceted is the word.
And it really forces you, I think, to consider that potential gap. We talk about the gap between the ambitious claims for an asset's utility, like with XRP, and the actual current verifiable on-chain data that should ideally be backing that up.
Is the utility already there in force, or is it still mostly potential waiting to be fully realized?
Evaluating that difference, that potential versus the present reality, seems pretty crucial for making sense of it all.
Couldn't agree more.
So here's maybe a final thought for you to chew on as you navigate this constantly shifting landscape. In a market that's swayed by everything from the U.S. jobs report to specific project news and corporate moves, how do you personally weigh the claimed real-world utility of a crypto asset against its undeniable price volatility and its current measurable activity on the blockchain? Finding that balance requires looking really closely at both the vision and the data.